Hello everybody, welcome back to another valuation investing video. And today in this video, I'm gonna be talking about my most recent purchase in my portfolio. So a few videos ago, I was talking about selling some of Google and ASML. And I was talking about the options I could take to potentially use that cash to something better for a better return. And I think I finally found that option. And this option is going to be Microsoft stock. So I just started a position in Microsoft because they just had their earnings report and the stock is not faring well, even though I believe the earnings was still pretty solid. So let's go over to why I decided to buy Microsoft and let's take a look at my position as of right now. But firstly, taking a look at Microsoft stock, this is one of the worst days for the company in honestly recent times that I can remember. Maybe in the past, say 4 or 5 years, this company's down almost 12% on the day. And as we can see over the past month, the past 6 months, it's just not been doing good for Microsoft. Year to date, the stock's down over 10%. So we're in correction territory for this company, and that's a big concern for people. But I think this is a good time to be buying the company. So with that being said, let me go over my portfolio as of today to show you guys how much of a weighting is Microsoft in my portfolio right now. Let me just start off by saying I know this portfolio doesn't have much diversification. Everybody tells me, why don't you have a lot of diversification? Mainly because I honestly think too much diversification can be bad for your portfolio. Look at Warren Buffett. He's said in the past, diversification. I think if you're a smaller investor and also younger, it's better to not be as diverse because you want to be able to pick the greatest companies on earth at great valuations, and then you can make great returns in those companies. So that's why I only have 5 companies right now. I honestly had 2 companies just a few months ago, maybe. I don't know exactly how long ago, but I've been diversifying just a little bit. And as we can see, my portfolio right now is worth $23,782. The total gain is $8,771. So the gain's looking pretty good. It's coming from 2 stocks mainly. As we can see here, this is my portfolio. Firstly, I have Adobe, 6 shares at an average price of $311.24. It's only $1,700, so it's a smaller position. ASML is one of my best gainers. That's 5 shares at $662. As we can see, I'm up almost $4,000 on ASML. Then the best performer for me so far is Google. I have 25.18 shares, an average price of $151.29. As we can see, I'm up $4,400. And then we have Meta. Meta just recently reported their earnings report, and it looked like a pretty solid earnings. As we can see, the stock, well, we can't see right here, but the stock is up almost 10% on the day. I have 7 shares at $613.98. I'm up almost $700. Here comes in Microsoft's position I just bought today. So Microsoft, I just bought 4 shares, only 4 shares. This is a starter position for me because I would want Microsoft to be a pretty large position in my portfolio. This is one of the best companies out there, and I just want it to be a larger position. Their fundamentals are amazing. As we can see with the average price, $427. Market price right now, it's at $425. I'm down just a little bit, but who cares? This is a starter position. It doesn't matter if you're down or up in the first even few months of your position. As we can see with the portfolio allocation, Google is still my biggest position, 35% almost. We have ASML at 30%, Meta 21, Adobe 7, and Microsoft at 7. So I want to make Microsoft near a 15-20% position as long as the stock gets to where I want it. And let's get into the fundamentals of Microsoft and where I'd want to continue to buy this company at. But before I get into the fundamentals and value calculations for Microsoft, let's just go over this recent earnings report for their full year 2026 quarter 2. As we can see, revenue was $81.3 billion, which was a beat. They beat on both the revenue and earnings per share, which was an increase of about 17%, up 15% in constant currency. So Microsoft is still a very fast growing company, even though it's one of the largest in the world. Their operating income, which was amazing, $38.3 billion, increased 21%. So their net income increased 20+%. As we can see, the diluted earnings per share was $5.16, increased 60%. The non-GAAP was $4.14 though, which was 24%. I think this GAAP basis was because of an OpenAI investment. As we can see, non-GAAP results exclude the impact from investments in OpenAI. So this is including OpenAI's valuation. If you include that, then it was still a very fast pace growth, but that's not really fair to include investments. So with that being said, this was a pretty good earnings, but let's also get into the businesses segments of this company for their earnings. Microsoft Cloud revenue was 51.5 billion, increased 26%. So basically everything did very good for this company. Everything really increased fast. Commercial remaining performance obligation increased 110%. That's very good. Almost everything with this company is increasing at least 10% besides Xbox content. That's the only thing that's not. As we can see, Microsoft 360, 17%. Consumer cloud revenue, 29%. LinkedIn, 11%. Dynamics 365, 19%. Azure was the biggest key for this company. People were expecting 37 to 39%. They reported technically 38%. So that's the main reason the stock is falling, is because people really wanted this over 40%. And me personally looking at this, 1 percentage point makes the stock drop over 10%. Me personally, I think that's just kind of idiotic. I really do believe that Azure, even though it basically grew at what analysts expected, the stock is tanking. And honestly, this Microsoft earnings was personally amazing to me. This was very good earnings, very solid. This was almost better than Meta's, but I think the reason for this is because Microsoft had higher hopes. Microsoft's trading at a higher valuation than Meta, and that's the main reason I think the stock is falling today. But I think it's overblown, and I think this is a good time to buy the company. So let me show you why that is. And taking a look at Microsoft, as I said, this stock is tanking. It's down 12% now. So this company is taking a big hit with their market cap, and now they're only a $3.15 trillion market cap. If I'm not mistaken, Microsoft was the first $4 trillion market cap. I'm not 100% sure, but I'm pretty sure they were. So this company is falling a good amount since that valuation. And now we have companies like Google, Apple, Nvidia ahead of Microsoft. So this company is really taking a huge hit on their valuation. Looking at the PE ratios, though, this is what's getting me excited. The PE ratio is 26.52, and the forward PE ratio only 22. This is one of the lowest Microsoft has had in the past 5 years, guys. This is one of the best valuations so far for Microsoft. The free cash flow yield also looks pretty good for this company. 1.7% is pretty high for Microsoft. Even though it's not a good free cash flow yield, it's still very high for a high quality company like Microsoft. The only thing I don't love is the net cash. They have negative $18 billion in net debt. So or net cash. That's a little bit worrying to me. But honestly, compared to the net income they're generating and making, it's literally nothing. So it's nothing to worry about. And as we can see with the SemStep stock analysis, this company is just amazing. Forward PE ratio only 22. It's a very low forward PE ratio now. It might be one of the lower valuations in the market with the big tech stocks. Return on invested capital is pretty solid. Growth numbers are pretty decent. They're slightly buying back shares. I wish they would allocate more money to buy back shares, but nonetheless, it's at least they're still slightly decreasing. Debt to free cash flow looks decent too. And as I was saying about the PE ratio, as we can see right here, this PE ratio is at 26.5. This was the lowest in 2022. So this company is trading at a very cheap valuation compared to the past 5 years. I think it's a good time to get in. And if we take a look at the intrinsic value calculator here and input some assumptions, I can show you guys why. For the bear case, I'm going to put 10% revenue growth. Some people may say that's aggressive, but this company just grew 17%. So I think that's fair for this company, and analysts expect this company to grow at 15%. I'm not going to be that bullish for the base case, 14%. I'm going to put bull case 8. Let's do 18. For the future profit margin, right now their profit margin is at about 36. I expect it to stay within this range, 34 to 38. So I'm just going to keep the base case at 36% profit margin. Now for the future PE ratio. The future PE ratio, I expect this company to trade at a pretty high valuation. The market right now is trading at a 20 to 25 PE ratio. I expect Microsoft to be trading at least at the market average or higher, just due to how good the fundamentals are of this company and how fast this company is growing. I think for the bear case, a company growing 10% deserves at least a 22 PE ratio. For the base case, I'm going to do a 27 PE ratio. I think that could be fair, honestly. Now for the bullish case, let's do a 30. Let's do 32. Yeah. For the shares outstanding, I expect this company to honestly just buy back shares. Bear case, I'm going to say it remains flat. Base case, I expect 0.25% buyback. base bull case, I expect 0.5%. If we calculate the intrinsic values for Microsoft here, we scroll down, I get a 12% return from today's price. So that's why I have just a starter position in this company. I don't think you're going to make insane returns, but for a company like Microsoft, I think 12% return is very good. So with this 12.1% return, this is, like I said, just a starter position in my portfolio. However, I want to buy this company. If we get under 400, I'm going to start loading up on this company. I think if you can get an annual return of 12 plus percent with a company like Microsoft, with these intrinsic value calculations, I think you have to pounce on it. The reason I say this is Microsoft is probably the one of the highest quality companies in the entire world, honestly. So when you get returns that would probably outperform the market at a decent rate, I think once again you just have to buy in. That's my personal belief. I start a small position here. Tell me guys what you think about this recent purchase. And thank you guys for watching this video. Please subscribe, hit the like button, comment down below. If you want to go check out the valuationinvesting.money website, it is the cheapest on YouTube. I promise you, you cannot find anything cheaper than this software. Plus, you get exclusive access to the Discord with only Patreon members so we can have a good community of investors. It's a 7-day free trial, only $8 per month. It's the cheapest on YouTube. If you can find me something cheaper, I'll lower the prices. So go ahead, check it out. Click right here, sign up today. Thank you guys for watching this video, and see ya.